Hello and welcome back to The Note. Here in the UK, Budget Day is upon us. Now, people in the UK of a certain age will probably know what I mean when I say that the Budget Day is rather like the FA Cup Day. It used to be one of the big centres, one of the big important moments in the UK calendar. Now it seems much less important. However, this year you have to note that we're at a very important juncture in the political calendar. The election is coming up next year now. And also in the economic calendar, where the UK, to the surprise of many, is leading the developed world into an economic recovery. How real is that recovery? Can it be continued? So there's still a lot to be calculated and a lot of decisions that George Osborne will have to make in that budget. With me now to discuss this is the Chief European Economist for Capital Economics here in London, Jonathan Loynes. Thank you very much for joining me today. Let's start by taking a look at a chart which you produced comparing consumer confidence with a government's poll lead over the years. And what we see is an improvement in consumer confidence which doesn't seem to have had any great effect on the government's political fortunes. What's going on?
That's absolutely right. You can see from the red line over on the right-hand side of the chart that consumer confidence has been picking up quite sharply for the last couple of years now. But that has not yet translated, as you would normally expect it to, into any sort of improvement in the incumbent government's opinion poll lead. It picked up a little bit a year or so ago, but has since fallen back and actually is no higher really now than it was when consumer confidence was at its trough back in 2011.
Now that's odd. Now if we take a look at another chart which looks at economic optimism, what people say they're expecting, it's even more dramatic. People seem to be about as optimistic for the economy as they've been at any point in some 20 or 30 years, and yet there's been no political benefit for the government.
Yes, I think that's right. This illustrates that even more starkly. It shows again the red line rising up very sharply, back up to the sorts of levels that were prevalent actually around the time of the last election back in 2010. But just like Gordon Brown then and the Labour Party back then, the Conservative Party and the coalition government haven't really yet been able to take any real credit for that economic recovery because the poll lead obviously is still in the territory which would see them lose a general election.
So, what can George Osborne do about this in the budget coming up, and how much more ammunition might he have for the autumn statement or for next year's budget?
Well, I think superficially, if you were looking at this, particularly perhaps in the olden days, a few years ago, one would have thought that all of this would persuade the Chancellor to implement quite a significant giveaway in the budget, try to buy credit, if you like, for the economic recovery.
And they used to call it stop-go economics, didn't they? Hit the accelerator before the election and then break off afterwards.
Well, that's right, sort of classic economic policy being driven by the political cycle. But I do think there are a couple of reasons perhaps not to expect that this time around. I mean, first of all, it's not clear that pre-election giveaways or splurges go down quite as well with the electorate perhaps as they used to. I think people are aware of the fact that we're still in the middle of a very large fiscal consolidation. There's a long way to go to get the public finances back towards full health. And of course that message will be underlined by likely criticism from George Osborne's own watchdog, the Office for Budget Responsibility, were he to start to slash taxes or raise government spending dramatically at a time when the public finances are still in a pretty precarious state. The other issue is perhaps one of timing. He will hope, I think, that because of the normal lags between the economy and opinion poll ratings, that over the next year or so, the government's popularity will pick up. But there is a danger, I suppose, that economic optimism could be falling again this time next year, particularly if people are starting to worry about rising interest rates. So he may just want to keep some powder dry for that.
And that's one particular important point, it strikes me. We have the possibility the Bank of England would appear to be closer to raising rates than any of the other big developed market central banks. You would think, plenty of forecasters think that were it not for the election, you would expect the first rate rise to come sometime in the few months before the election, which might not be good for people's sense of house prices or their sense of well-being. How is that interest rate conundrum going to affect budget calculations?
Well, my own expectation actually is that we won't see interest rates rise ahead of the election, not because of political reasons, but because of economic ones. I think there's still a decent amount of spare capacity in the economy. I think inflation is going to remain low. There's also the possibility, of course, that if a bit of the heat needs to be taken out of the housing market, that can be done via other means. The Financial Policy Committee now has these prudential tools with which it can sort of affect different parts of the economy, including the housing market. So that might save Mr. Osborne from an interest rate hike ahead of the election, but there's no guarantees about that. And I think that's another reason why he might want to just keep a bit of money back, if indeed he has some, perhaps for a giveaway a bit closer to the election to try and counter the negative effect of a possible interest rate increase.
Okay, Jonathan, thank you very much indeed. Okay, UK viewers, tomorrow may not be all that exciting. You should keep watching maybe, but with any luck, the FA Cup final is going to be a bit more exciting.